Welcome to the Wheats on Your Mind podcast. My name is Aaron Harries. Wheats on Your Mind is brought to you by the Kansas Wheat Commission and Kansas Association of Wheat Growers. On this episode of the podcast, our guest is Tanner Ehmke with CoBank. Tanner Ehmke is the lead economist for grain and oil seeds at CoBank's Knowledge Exchange research team that provides market and industry outlooks on sectors affecting the rural economy. Prior to joining CoBank in 2015, Tanner farmed and marketed seed for his family seed company in western Kansas, where his family homesteaded in 1885. He previously was a commodities analyst at Ag Resource Company in Chicago, a markets reporter for Dow Jones at the Chicago Board of Trade, and an agricultural journalist covering crop production and farm business management. Tanner holds a bachelor's in agriculture economics and a master's in agriculture business, both from Kansas State University. Tanner, thanks for joining us on the podcast.
Thanks for having me, Aaron. Good to see you as always.
Good to see you. And we went over your bio there briefly, but I think it'd be a good refresher just to tell us in general who CoBank is.
There's a lot of questions about that. We are part of the farm credit system, and farm credit is the largest lender in ag. What is our role in the farm credit system? We have a dual role, if you will. We're the funding bank for all the farm credit associations in the western half of the U.S. That includes Kansas and Oklahoma and everything west, all the way to Alaska and Hawaii. And so when a farmer or rancher comes to their local farm credit association for a loan, that money is coming from CoBank. And then our other mandate is with originally co-ops, thus the name CoBank is cooperative bank. It doesn't mean Colorado Bank. A lot of people think that because we're headquartered in Denver, that means there's some sort of tie into Colorado. No, it means cooperative bank. And all the co-ops out there, grain co-ops, farmer-owned co-ops, those are our customers for the most part. And then over the years, our lending authority has expanded well beyond that, but that was originally our major mandate, was as a funding bank and the bank for co-ops.
What is the mission of your Knowledge Exchange research team?
Yeah, great question. Why do we exist? Again, there's like a dual mandate, if you will, kind of like the Fed. We serve our customers. A lot of our customers don't have their own research division, and so what we do is we provide research and insights to our borrowers they can use internally for their customers or for their board. A lot of the boards made up of local farmers. And so we provide insights about what's going on in the industry. And then we go out and meet with those customers on a regular basis, traveling around the country, talking about things that we see, sharing the insights that we have with other customers in the industry. Because our lending authority is so vast, we have a lot of insights that we can share with our customers up and down the supply chain. And then internally, we're a resource for the leadership in CoBank about what's going on with the industry, what the outlook is for the markets and the economy. Really, it's broad service there that we provide internally and externally to all of our customers.
Let's talk about outlooks. Starting to plant wheat here in Kansas, just starting to scrape the surface. Literally, we're going to dodge some rains, it sounds like, but a lot of decisions being made by farmers right now. Everybody's got kind of their prediction on maybe what wheat acres will do in the state, and it's a tough economy right now, Tanner. And so, how are farmers making those decisions when they look at the profitability or lack thereof of the different crops that are available in Kansas?
That's the question on everybody's mind right now. When nothing is making money, which one do you choose? It's a choice of what's the least dirty shirt in the pile when it comes to a lot of farmers' decisions. Now, you know farmers just as well as I do. Most farmers are just going to stick to the rotations for agronomic reasons, for risk diversity reasons, what have you. A lot of farmers just stick with that rotation, which is the smart thing to do. Can't advise a farmer to do otherwise. If there are acres in question, that is a hard decision. Corn is down price, soybeans, wheat, grain, sorghum. That's a hard story right there. So many crops right now are really struggling to pencil a profit, not just because prices are down, but also because the cost of production is so elevated. Cost of production hasn't come down commensurate with what's going on in the commodity markets for a whole host of reasons. First of all, the cost of production is very slow to catch up with what happens in commodity markets, so there is always a lag there. Then we have got some other extenuating circumstances here, as it is with tariffs. Tariffs are raising the cost of inputs, especially fertilizer. crop chemicals, things like that. Steel, those raw materials are elevating other input costs, when you're talking about machinery and what have you. So it's a tough decision right there for a lot of farmers. So when you have headwinds all around you, where do you choose? How do you pencil it? Well, there's some logic out there that some farmers will opt to grow wheat because it is a low-cost crop. It doesn't take a lot of inputs to put a wheat crop in the ground, okay? And you may be coming into a situation where you have some good subsoil moisture right now that you want to take advantage of. So there's some logic there from that standpoint that wheat acres may be steady or in some cases improve. But it's another issue here when it comes to price. When you compare, let's say, Kansas City HRW wheat versus corn, and just look at those price ratios as an indicator of what the market is telling you to plant. And unfortunately, wheat prices have come back quite a bit more than corn prices over the past year. When you look at prices today on the board versus where we were last year, there's definitely a steeper retraction there for wheat than it is for corn. And corn is really your barometer there for your other alternatives. Grain sorghum is typically going to be priced off of corn. Right now, grain sorghum has got a really terrible story there. So it looks like the best alternative for a lot of producers is to look at corn or soybeans, or perhaps other crops. But those are your two major ones. And right now, the market indicator there is that we're going to see a retraction of wheat, at least by a little bit, for winter wheat. Now, that may be a different case in the spring when it comes to spring wheat. Up in the Dakotas, we may actually see a rebound in acres there because they had such a steep drop in acres last year or this past year. And so we actually may see spring wheat acres next year bounce back just a little bit. But as it is with winter wheat, we're expecting a little bit of a retracement, a bit of pullback in planted acres.
We had reached a really dramatic low in winter wheat planted acres just 3 or 4 years ago, particularly here in Kansas. We were well down below 6.5 million acres. At that point in time, I mean, hindsight's 2020. Did you see the rebound that we've got here in acres now? And what do you see going forward a little bit longer term? Have we maybe plateaued on winter wheat acres?
That's a hard one to guess. A lot of it depends upon what happens in Russia, I think. First of all, again, we got to go back to baseline. A lot of farmers have to have wheat in the rotation. So there is going to be a baseline at some point. We can't stop growing wheat in this country. We are a wheat growing country, and that's never going to change. As it is with how much more we have to lose, if we can talk about Russia just for a minute. Russia is entering in this new phase, kind of like what we've seen, where Russian farmers are looking at alternatives to wheat. So they may not be diversifying out of wheat over to corn and soybeans, but it's other crops like sunflowers or perhaps corn. They can do corn over there as well, maybe soybeans. But there are other crops that farmers are looking to diversify into. And right now over in Russia, it's not a good situation financially for those farmers either. And wheat may not be penciling for them either. And so we are at this nexus point, I think, where Russian farmers are saying, you know what, I can't do wheat on wheat rotations anymore. I got to start pulling in some other crops to diversify for market reasons and perhaps agronomic reasons as well. But really, for market diversification purposes, Russian farmers are now factoring that in, which means if we start to see wheat acres pull back a little bit over in that Black Sea region, what that means then is potentially more opportunity for wheat to come back to some rotations here in the U.S. So I think perhaps we are at that point, Aaron, where we're not going to see the losses in acres that we've seen in the past. Perhaps we are at that bottom line on acreage, and perhaps longer term may even start to see acres come up just a bit as Russian farmers start to diversify.
That's a great perspective on that. Before we leave input costs, let's talk a little bit more about that. I mean, we've seen fertilizer prices spiking a little bit, and fuel been pretty volatile. And as you mentioned, some of that is tariff related. What's your projection? You see input costs stabilizing at high prices as we go through 2025?
Well, that's a tough one. That might be a question for our farm supply analyst, Jackie Fatka. But Jackie and I talk, and we're following kind of the same market outlooks and prices, and like I said earlier, it takes a little bit for inputs to catch up to commodity prices. Assuming at some point we're going to see tariffs come off, don't ask me when or to what degree, but we're going to have to see that really happen before we see a material drop in fertilizer prices. The other factor is what's going on with Russia. Russia's a major exporter of fertilizer. We're obviously got an embargo on those guys. That's impacting mostly growers on the eastern part of the U.S. where they bring in Russian fertilizer. Well, they are really struggling. That is a really tough story there because there's no really easy way to get fertilizer from the Mississippi to that eastern seaboard to the farmers in that area. So I would say that farmers on the plains probably have it not as bad as other farmers in the U.S. But I'd still argue there's an opportunity for fertilizer prices to come down just because as commodity prices stay low. Ultimately, those costs are going to have to follow. This may not happen on the timeline that farmers would like. But obviously, the tariffs are an issue, and we'd like to see those tariffs go away sooner rather than later.
Well, the silver lining of those cheap prices and a weaker dollar has been increased exports, particularly in the wheat market. We're not affected as much by tariffed countries as some of 100%. our other commodity brethren are. So,
absolutely.
Tell us the latest on export markets.
It's been a surprisingly positive story for wheat. As you said, the silver lining here, or as we like to say, the pony in the manure. That joke, trying to find the silver lining. Mm-hmm. The good story here and all this bad news is that export's been doing surprisingly well, especially for corn and wheat. And we need that story to continue to play out. My only caution here is that you have it sounds like a bigger wheat crop coming in Australia. That's Bears had come out with a bigger estimate on what's going on with Australian production, and then some private industry estimates on the size of the Russian crop are also coming in bigger than what they used to be or what we were previously. So we need to enjoy these faster exports now. I will say that, again, the positive story here is that it's been Mexico, and we've got cheap rail rates. We've got a strategic advantage into the Mexican market. So although we do have some headwinds coming from the southern hemisphere harvest, specifically Australia, and perhaps a bigger harvest in Russia, we've got a very good story here with Mexico. And with the cheap dollar and cheap rail rates, the Mexican market's just been a gold mine for us. They've been taking advantage of this dynamic of cheap grain prices in the U.S., cheapening dollar, and cheap rail rates. It doesn't really get much better than that if you're Mexico. I mean, it's the trifecta. They are cashing in on that, if you will. So we hope to see that story continue. We don't see that really changing anytime soon. So outside of Mexico, we'll perhaps see some more headwinds, but really Mexico's been a positive story, and we don't see that changing.
Well, we've got the latest numbers from USDA, and do you think the market has its finger on the number of corn bushels finally, kind of all that accounted for?
Oh, no.
No.
We've got more. I think there's going to be some more revisions on corn. When you look at some of the weather maps out there, it's been hot and dry in some areas, especially in the eastern corn belt. It's not looking good. So it sounds like USDA first of all, USDA is just doing their job when they come out with these estimates. As time goes on and more data is gathered, then they readjust, and they will. And you can see it in the crop progress reports. You can look at the weather maps, and you can see it some of the private estimates out there that are calling for a much lower yield on corn. And so we are most definitely going to see future revisions. I'd say in this last report, Aaron, what caught so many people off guard, including myself, was the acreage revision. Big increase in corn acres, even though we saw the corn yield estimate come down. So that really kind of made up for the reduction in the downward revision on yield, was the upward revision on acreage. But going forward, we've got more revisions coming, I'm sure. And again, we have at the same time a very strong export program. In the last report, USDA lifted their export view on corn by 100 million bushels. I was expecting an increase, not that much. And so they were definitely dialing in the fact that we've got that trifecta, like I said earlier, cheap rail rates to the Gulf, cheap dollar, and cheap grain. And what happens when you have those three things come together? You're going to have an export program. And China is not part of that story really on corn or wheat, and so we're benefiting from that. But I think there's probably going to be a tighter budget or a balance sheet for corn and wheat going forward, especially for corn, just because of the down revisions on yield.
weather is always an impact on the marketplace, and we've got drought in some of those corn regions, as you said, and again some wet weather. Actually, here in Kansas, heading into planting season as we go, do you have personally an opinion on what you think wheat acres are going to do in Kansas? Your family plants wheat.
I need to talk to my folks about that. The word around the campfire, if you will, is that wheat acres are going to come back just a bit. Not a whole lot. We do have to remember that we're coming off of a huge increase in corn acres. How many farmers are going to be corn and milo both? You got to add those two together. Corn or milo acres were fairly resilient. I was surprised by how many acres we planted. If you talk to my parents, for those of you who don't know, will run a seed company in western Kansas, Ehmke Seed. And I was talking with my folks earlier about what they think acres are going to do, and they said, well, look at all these corn acres. This expansion of corn acreage, that's going to cut into wheat probably. Unless people don't do fallow, if people go straight from corn and milo right into wheat, as soon as they take the corn crop off, they go back right in there and plant wheat right behind it, which is a little bit risky to do out in western Kansas if you don't have any subsoil moisture. But some people may try to do that. But the story here of an expanded acreage on corn and milo probably means we're just gonna have fewer wheat acres, because most farmers are not gonna double crop, if you will, wheat right into corn stalks or milo stalks. So the expansion of corn and milo acreage is probably going to reduce availability for acres to be planted to wheat. And
we'll see how late the bean harvest comes off here in Kansas too, because that has a big factor on wheat acres also.
Yes.
So, well, right. Speaking of drought and water issue, you're also, as you mentioned, your family closer to western Kansas, and water is big news here in Kansas, and it will be for the foreseeable future. So we talk a lot about cropping mix and cropping rotation, and what do you think crops like wheat and triticale, how do they stand against corn as we have lower water resources?
That might be the positive story for the small grains, is that, as you pointed out, as we have lower irrigation levels, lower water tables, we don't have pumping capacity or irrigation capacity to support a corn crop. I think the rule of thumb is you got to have about 500 gallons a minute on your wells to support a corn crop. And as you know, that's the story that's going on with Ogallala. And it's been continually going down. And so what do you do with those acres that no longer support corn? Well, you can go to a small grains crop, perhaps go to sorghum silage, something like that. But, the small grains like wheat, rye, triticale, they're all going to find a place in those fields or those circles that have lower pumping capacity. And now, how does that break out? You're going to see more of those forage crops being used for silage or for graze out programs, things like that. And so that's where you're going to see that blend those small grain winter crops start to fit in. So there's a story there for wheat, but it's competing with other small grains like you mentioned, triticale, rye, and what have you. That's all going to be fitting into the mix there, and as the water tables continue to drop, those kind of crops are going to be each going to find a place. It's just to what degree and how does that play out it's going to depend upon the end use. What are they after? If they're after silage, it's probably going to be a heavy silage crop like triticale that produces more biomass. It's a crop that has a bigger leaf than wheat. So for that reason, triticale is going to find more of a use. But you're going to have wheat in there as well. In some places I know that farmers are doing that. Then they're slipping in rye because it has a different growing season, so it extends the grazing season.
All right, let's slip into a little bit more macroeconomic issues from CoBank's perspective. Tanner, are we in an ag recession? How financially healthy are farm operations in wheat country? I know that's a tough question to throw your way, but...
Well, first of all, we got to split out the ag economy. You have the animal protein side of the balance sheet in agriculture that is doing extraordinarily well.
Right.
I was just in Kansas here recently, meeting with the board at High Plains Farm Credit in Hayes. We had a great discussion, great meeting. I'll tell you, they've got some sharp people on their board. The livestock loans are just doing fantastic. Couldn't do any better right now. I mean, this is hard to beat right now for those guys. You have record high cattle prices. Feed prices are very affordable. You've got your buffet of options when it comes to feed availability between all the grains. So it's really hard to not be making money right now if you're in cattle. or the other species too, hogs, poultry, you name it, they're all doing quite well. Then you turn to the farming side of the ag economy. Obviously, it's not been a good story here. Since we've started coming down on price the last couple of years, a lot of farmers have been carrying over working capital from those good years when we had record high farm income. And so farmers had money in the bank. They were comfortable to spend some of it down, even though they weren't making money. The last couple of years, they were doing better financially simply because of their carryover working capital. Unfortunately, that working capital has been eroded for most farmers. And from what I'm hearing out there, there's no farmer or very few farmers that are able to pencil a profit, irrespective of your acreage. As they typically say, the larger farmers are going to typically do better because of economies of scale. So they have a lower cost of production. But from what I'm hearing out there, even the larger farmers are also in the red. There is no money being made simply because cost of production is still high for everybody. So right now, we're heading into a very concerning situation. I know with farm credit associations I work with around the country, they're absolutely getting a little bit concerned. They're increasing their loan loss reserves. Case of more struggling loans out there, more non-performing loans. It's going to be difficult this year. If this continues into next year, Aaron, then we're talking about a really concerning situation, because now you've talked about farmers that have completely run out of their working capital reserves, and now they're simply operating in the red. And then in some cases, you're going to see a situation where farmers are going to have to start selling assets in order to maintain their credit worthiness. They got to pay down debt. That's not a situation anybody's looking forward to. I know the farm credit associations, like I mentioned earlier, they're there to work with the farmers and work through those situations. We're what we call patient capital. Mm-hmm. Farm credit does not bail on their customers. They work with their customers through these specific kind of periods. When you look at the numbers from the U.S. courts on Chapter 12 filings, and that Chapter 12 is family farm reorganization, those numbers are ticking up. They're starting to climb. They're not at the levels that we've seen in years prior, but they are quickly climbing. And if we play that trend forward, I think the concern is going to be for next year, not this year. It's what happens in 2026, where we're going to see a lot more stress out there.
Yeah, that's sad reality there. There's some brighter news in what was passed in the Big Beautiful Farm Bill, I call it, on better, reference prices and insurance rates and things. But that's down the road here a few months. You sense anything coming from D.C.? I know you don't work in D.C., but maybe to bridge that gap, maybe some kind of payments. Have you heard any discussion of that?
Well, in the USDA's latest income forecast, which they released last week, they're expecting more transfer payments coming. Now, what form is that in precisely? Some are arguing that because of the tariffs, there's more tariff money available for farmers, that can be used to support farmers. There's some concern there about the viability of that argument when Trump's tariffs have been challenged in court. And we got to see where the Supreme Court lands on the tariffs. And if they rule that those tariffs were illegal and outside of the president's authority, then that money is going to have to be paid back. At which point, I would venture a guess that it's going to be a hard argument to make that farmers are going to be getting any of those transfer payments that USDA is expecting. So I don't know. That's a hard one really to guess. I mean, there's a lot of moving parts on that, Aaron. But that's kind of what I'm hearing. Things can change politically with the speed of a tweet these days. We always have that hope out there that some producers will find a little bit more support. Really, trying to hang your hat on Washington, D.C. for the profitability of your farm typically is not a good idea. You got to work with your banker and your accountant and anyone else you were in business with to get you through the rough times. I'm not hanging my hat on Washington, D.C. to be the savior for farming, Aaron.
That's probably a wise move. That's a wise move.
Right. I'm not trusting anything out of D.C. these days or ever. It all comes down to you got to work with the people that help you get through every day. Your family, your banker, your accountant, co-op. All those people that you do business with, they're the people that are going to get you through it. And
there is some collateral damage in this situation, so to speak. There's farm equipment industry struggling right now. Yeah, CoBank, the lender to the co-ops, what's the cooperative situation?
The situation's changed. a little bit for the co-ops because we have bigger crops, much bigger. We're going to have a record crop this year, a record fall crop in addition to pretty good sized wheat crop. And so the co-op is going to be turning the elevator more often now. That's how they make money, by storing and turning bushels. And so for the grain elevators, this is a much improved situation, especially in Kansas over the past 3 years of no crop. That's been rough. That has been terrible for grain elevators. Finally, they're catching a break. Grain sorghum has been the outlier there. That's been a tough situation for a lot of elevators to work through. We're looking at some really low basis levels for grain sorghum or milo this fall because China is 90% of that market for exports, and China's not buying. And so we've got all this stockpiled, and carryover milo from last year's crop that we still have to work through. And so there's going to be some basis challenges out there that farmers and co-ops are going to deal with. But for co-ops, generally speaking, the bigger crop is a much improved situation for them.
As we wrap this up, Tanner, what are a few things that you're going to be watching in the next few months? Just 2 or 3 items on the list. What are the things you're keeping a watch on?
Well, as it is with customers that borrow money from Farm Credit and CoBank, it's going to be the interest rates and what happens with the Federal Reserve. That's huge. Everyone would benefit short term, at least, with lower interest rates from the Fed. My concern, though, is longer term is if we started getting really aggressive on cutting interest rates, what does that mean for inflation and cost of production? As we already talked about, we don't need higher costs anymore in ag. And so I'm a little touchy on that, how aggressive the Fed is going to get on cutting interest rates, because if they go after it, that could reignite inflation again. And we don't want to make that mistake. So I'm watching what's happening with the Fed. I'm watching what's happening with the dollar. We need a cheap dollar to keep moving exports. We need a healthy export program, especially for corn and wheat. And we need a trade deal done with China yesterday to resolve our situation with grain, sorghum, and soybeans especially. But that's hard to judge when that's going to change. That's a political thing and I'm not good at judging or forecasting politics, Aaron. I'm terrible at it. Anytime I think I got Washington, D.C. figured out, I figured out I'm wrong.
Yeah.
As for the market indicators, I'm looking at what's going to happen with the Fed and what's going to happen with exports and the dollar. Those are my 2 main things. And obviously, we got to watch what happens outside of the U.S. with our competitors, watching what happens with Australia and Russia right now with wheat.
Well, if folks want to learn more and find out some information on Knowledge Exchange or maybe follow you to keep up on information you're providing, what should they do?
You can find everything at CoBank's website. There's a tab there on Knowledge Exchange. You can sign up for our research for free. We also have a newsletter we send out every Monday from Knowledge Exchange. It's called Gleanings. It's focused on the grain and biofuel markets. And you can send an email to me. We don't have it on the website, so you have to send it to my email, which is tehmke@cobank.com if you want to sign up for that weekly newsletter on grains and biofuels.
All right, Tanner. Hey, it's been great talking to you. Thanks for sharing that information with us.
Yeah, good seeing you. And good seeing you in Manhattan when CoBank dropped in at the Wheat Innovation Center. That was impressive. What everything that's going on there gives us hope that you guys are taking the lead on Kansas agriculture.
We're doing the best we can. All right. Thank you, sir. My thanks to Tanner Ehmke for joining me on this episode of the Wheat's on Your Mind podcast. If you have a topic you'd like us to cover in the future or have a follow-up question for one of our guests, please email us at kswheat@kswheat.com. You can always find previous episodes of Wheat's on Your Mind at wheatsonyourmind.com or Apple and Spotify. I'm Aaron Harries. Thanks for listening.